Right. Hello, everybody. Steve Griffiths here, developer of the MT Predictor software program. Just like to welcome you all to today's webinar. So if you could just let me know whether you can hear me and whether you can see me okay or see the risk disclaimer okay, that'd be great. So if you just slide your mouse over to the left-hand side of your browser window, you'll see a Q&A box. You can just type in the Q&A box, just let us know to ask a question there. Just let us know whether you can hear and see me okay. That would be actually great. And then just click on the Q&A just to remove the Q&A box. Okay, that's good. You can see the questions coming in now, or they're okay now. Right, just want to run through our risk disclaimer and just remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand that losses can and will and do unfold. It's just a part of trading. And that actually brings us nicely on to today, or what I'd like to talk about for the main part of today, which is the psychology of trading. We've spoken a lot over the last last years and decades, basically, on how to use the MT Predictor add-ons, and we can briefly go over those again a bit later. But one of the main topics that many of you struggle with is basically how to apply the tools on a day-to-day basis. And I think this basically is the same for any kind of trading approach. It's the psychology of trading. So I wanted to have a good look at that today. Right, I'm using our NinjaTrader 8 add-ons here. And as an example, I was asked about a particular setup on a 15-minute chart of the British pound US dollar. If I scroll back a bit, it was actually this TS3, W3 or Wave 3 trade setup here. Right, so let's just remind you all about what we do with MT Predictor and how we approach the trades or finding trade setups, because this is important. This is an important part of the first step of the psychology of trading as well, is that we're not a black box system. We don't just blindly look at potential trade setups, perhaps in the direction of our MTP trend color, and just take things blindly. The reason we don't do that is because we know and understand that basically markets are random half the time. In other words, half the time or slightly more, the markets are just not fitting into any discernible patterns. And I think this is one fact about the financial markets that I know a lot of new traders struggle with. In fact, actually experienced traders struggle with, in that when the markets are not doing what you think they should do. And it's just very, very difficult to try and do analysis or do anything when the basic markets just don't seem to be doing what they should do. And this is just one thing I've learned over the last 34 years, is that there are times when markets just aren't doing what they should do, and the pattern is just basically random. So I think the first stage of the sort of psychology of trading is to really understand, but really accept that half the time you really just won't know what the markets are doing. They just don't do what they should do. And that's why I think so many trading approaches fall down and so many traders struggle. So, okay, how do we then approach this? Right, well, the first thing we do is we look to see whether the market is making a clear pattern on a higher time frame. So this is what we do at MT Predictor. We use a multi-time frame approach. So if you're trading on a 15-minute chart, we look to a time frame between 3 and 5 time frames higher. So a 15-minute would mean we're going out to a 60-minute. If you're, say, trading the E-minis on 3 minutes that we do look at quite a lot in these webinars, that would mean going out to the, say, 15-minute chart. If you're a day trader looking at a longer term trader looking at daily charts, that would mean going out to the weekly charts. So I just want to scroll back in time a little bit, perhaps before this low here had actually come in. So what we do is we look to use our DPs on previous pivots. Now, those of you who are new to MT Predictor, there are other webinars where we go over exactly which pivots to use. But very basically, if a market is going in the same direction, you can see here the market's going down. So it's, again, we're not looking at our MTP trend color on this higher time frame. We're just looking at the pivots. So if the market's going down like this, we use the last pivot in the same direction. So it'd be this pivot here. We right mouse click, we do a DP, and that places an area of support. But can you see how it's on the chart in advance? In other words, it's there before the market gets there. So we're basically asking the question of the market. We're saying, okay, that's a potential support zone. What are you going to do at that area? As the market went forward here, can you see what happened? It actually went down to that area and then started to go back up again. So that's when we actually come down to the shorter time frame. In this case, it would have been the 3 minute. If I scroll back a bit, and can you see what's happened here? Look, can you see that? There's your higher time frame support zone. The market's gone down into that. It's now reversed that level and started to come up. But notice how it's reversed really cleanly at that level. In other words, it's made a nice, clear, clean pattern. That's what we're looking for. So that's the first part of the psychology, is we're just letting the market come to us. Okay, we're not trying to scrap around trying to find trades that come up in a market analyzer or a scanner. We're not trying to scratch our heads predicting where things may go. We're just asking the question of the market. There's a support zone. What are you going to do at that area? So in this case, the British pound on the 60/50 minute chart said, yes, I'm going to reverse. It then started to rally back up again. That's when we can look at our MTP trend. And as you can see now, it went blue to confirm that uptrend. So what we can see now is that the market pattern is now clear. Because the market pattern is now clear and it's an uptrend because it's coming up off this support, we now know to look for buy setups. And as you can see, here's a TS3 W3 wave 3 trade setup that came in on this particular bar here. So we right mouse click over the blue buy bar. Remember, you have to be over the correctly colored bar. So if you're looking for a buy setup, it has to be over a blue bar. It won't work on a gray or red. If you're looking for a sell setup, it has to be over a red bar. It won't work on a blue or a gray. So over the blue setup, we then click on Analyze Trade Setup, and this then gives you the entry. Now remember, we use position sizing. In this case, we're looking at, well, here I've set this to 1%, but if I want to change that back to our default 2%, you go to Tools, MT Predictor, Settings. You then go to our risk profiles here, and here you can set your trade risk for the asset class that you want to do. So here the trade risk for currencies is at 1%. So let's put that back, 2%, apply. And okay, and as you can see, it's double the number mini lots there available for that particular setup. So that's risking, can you see at the top, 2% of a sample $20,000 account. You can set up different account sizes, as we've seen previously. So if you've got a 10K account or say a 5K account, again, that do the position sizing for you. Why do we want to worry about the position sizing here? Just set that back to the default 20K. Well, it's important because losses will unfold. It doesn't matter what trading approach you take, there always will be losing trades. That's just a fact of trading life. No matter how good your trade setup is, how good the picture then looks, there will be losing setups. It's as simple as that. But because we're using position sizing, those losses are small at -1R, in other words, one risk unit. So that's like the second part of the psychology of trading. It's first and foremost, you have to have the discipline to wait till the picture's clear. That will keep you out of a lot of chop and mess and, confusion to start with. Then when the losing trades come through, even in a clear picture, the losses will only be small. Now that is so important as a trader, is to keep those losses small. So that's like the second part of the psychology of trading. You're keeping those losses small. Now that's great. You say, okay, my losses are cut small, but obviously I want to be a trader to make money. So how do we actually try and make money over the long term? Well, for that, you then have to have profits. If I just scroll forward here a bit further, can you see here the British pound did go up to our wave 3 target, which is our target for our W3 trade setup. It went up to that target there, and that's where it made a profit of just over $2,000, risking just under 400. But the important thing is this RR number. Can you see here how at the profit target, the profit was large, not just in dollars, but large in risk reward units. And this is the last part, I think, of the psychology of trading, in that it is absolutely vital to have large profits, because you'll never ever move forward if you only have small losses and small profits. And I think this is, again, is a real issue that I think many traders struggle with, is understanding that you have to have large profits. Now, it'd be great if a market moved with you straight away, but in reality, that doesn't happen. If I zoom out a bit, just look what this trade did before it got up to that target. There is where you came in. It shot up, shot down, shot sideways, shot around a bit, crawled up a bit, drifted off a bit, went up a bit, drifted down a bit, went up a bit, drifted down a bit before it finally went up to the target. If I grab this risk reward tool, there you came into the trade. Suddenly you're on 2.5 hour profit. Then it went down into a loss. Then it went back up to 2.5, down to 1.5. Got up to these first targets here, where you're sitting on about 3.5 hour profit. Then it went down to 1 hour profit. Then it went up slightly to 4.2 hour. Then it went down to just over 1 hour profit. So do you see how hard psychologically it would have been sitting through all this, where you see your profit go up, down, 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 and going nowhere before finally it went up to its target, where you got the profit of 5.5 times the initial risk. So psychologically, and you can see the pound's actually backing off now, so that would have been a good place to come out. So psychologically, I'll make no bones about it, trying to sit through mess like this is really, really, really hard. It really is. But the thing is, to get these big profits, the markets have to go somewhere. In other words, they have to make bigger moves. And to make bigger moves takes time. But during that time, you can have chop like this. But it is so vitally important that you do let the market, or you do let the markets, you give them time to get to their targets. And within that, you have to accept that your profit will going up and down, up and down, up and down. I mean, here it would be so easy to try and, perhaps come out here somewhere. So let's suddenly use the ATR stop. Let's come out at here. Oh, we've made 1.7 hour profit. But do you see how hard it would be if you've just come off the back of making a losing trade? You just make 1.7 hour profit. You then go in, make another losing trade. Suddenly, you're in loss overall. But what happens is if you suddenly come in with a profit of 5.5 hour, you could make 1, 2, 3, even 4 losing trades, and you're still in profit overall. See the pound's backing off quite a lot there at the moment now. So that would have been exactly the right place to come out. So do you understand why it's so important to sort of follow the 3 steps? First and foremost, only trade when the picture is clear. I think most people really fundamentally understand that and accept that and have the patience to only wait till you get clear signals. I think most traders also accept that you have to keep your losses small. I mean, it's quite easy to take losing trades, isn't it? But, keep those losses small. But after that's happened, I think actually one of the harder things is letting the trade run. I don't know what you guys think, but from what I've heard from most of my customers, most of you guys, and I know from my own experience from many years ago, letting trades run is really hard because it plays on your mind the whole time. It's so easy, particularly when you're a short-term trader, to focus on every little wiggle, then start placing, DPs on your charts here and say, oh, should I come out here? Should I come out there? All that kind of thing. And it's so difficult. It's so tempting to try and lock in a small profit. I think there's been some studies done by psychologists. I haven't read much of it myself, but I think there's some psychologies done. I think they were looking at golf. That's one of the games that I play, And I think they were saying that most people would rather take a par rather than a birdie on the fear of getting a bogey. In other words, they'd rather come out, not doing anything on the fear of losing a trade, on the fear of losing out, rather than having the confidence to sit and wait for the better outcome. In other words, most people will want to move their stops too close or come out of a trade with a small profit, but the fear is going to go back and make a losing trade rather than having the confidence to let it run till it gets to its profit targets. So the fear of losing out in us humans seems to be far, far stronger than the desire to actually to win. It's very strange, isn't it? Perhaps it's just comes from evolution and self-preservation. I mean, the fear of actually getting hurt and being killed is probably why it kept us alive in our early evolution. So I think that's why it's inbred with us. So we have a real innate fear of losing out, and that then forces us to make bad decisions rather than having confidence to let the trade run. But the thing is, without these big profits, without letting trades run, you'll never have the big enough cushion to then sort of soak up the losing trades, even if the losses are kept small. So does that make sense to everyone? And can you see why it's so important to let these big profits run and why it's so important to give them time? I mean, one thing I do myself is I like to then, if I'm in a trade, is actually just go and do something else. If you're using NinjaTrade like I've got here, and you've got our trade module, we had a good look at this a couple of weeks ago, didn't we? It basically manages the trade for you. So it's, it will actually have your orders on the chart there. If once the market's got up into chop like this, I mean, you can bring your stop to break even. That's probably fair enough. But obviously you don't want to try and bring it any closer, and then just leave it there. Leave it there until it hits the target. The MIT order will be in the market there for you, and it just does it for you. So that's probably a good thing to do, is to let the trade run on that. Are there any questions on that before I go and have a quick look at some other markets, some other ideas? Are there any questions on the psychology of trading, and the like the three-step process? First and foremost, where we use the higher time frame DPs, so we're only looking to even start our analysis when the large degree trend or large degree picture is clear. In other words, when the market is making a reversal off a higher time frame support and resistance zone, that then gives us a confidence in the large degree trend direction. Then once that comes within that, there will be trades in that trend direction, but out of those trades there will be losses. So the job then is to keep those losses small on the trades that don't go with you, and that will happen. In fact, you'll probably have more losing trades than winning trades. But it's so important to keep those losses small, because then once you've let the profits run and you had the large trades, that's then what moves your account forward. So don't expect to have big profits every day. Don't expect to have big profits every week. You don't get that many trades that run for these big profits. So trading is quite a hard game psychologically speaking. I think this is why I think they've looked at this, and I think they say something between 95 and 97% of amateur traders fail in this business. So that's a shocking statistic, isn't it? If you think about it, out of 100 people, only 3 of them will be still there after, I think they say something like between 3 to 6 months. So that 3 out of 100 success rate is phenomenally small. So there's so few people that can actually really understand this, really do overcome the challenges of this. This is why I wanted to have a good look at it today, because I know a lot of you do struggle with this. I just wanted to really reiterate what you need to work on yourself. And it is a battle between you and yourself. That you don't control the markets. It's only your opinion of what the markets are doing that can be changed. And you really have to change your mindset to allow you to let these trades run further when they're going with you. So a good battle that a lot of you have to work with, but if you do really work at it, it is worth it. Right, let's have a look at. There's a couple of other markets I wanted to look at from yesterday, just to reiterate this. These are the E-minis from yesterday, day session only charts. Just look at these as well. Is that again? Sometimes the market can be frustrating. Like this is the ES. So if I go to a 15-minute chart, I'll just place the DPs on for these, and just remind you that. Remember in the last example, we saw that as a market is going in the trend direction, you place the DP from the last pivot high. But also one of the major ones we do is off the last swing into the high or low, isn't it? So can you see here on the E-minis, can you see that? That's the last main pivot low. This here is the last swing into the low, isn't it? So if I go back here somewhere, this is the last swing into that low. So this pivot here would be the one where we right mouse click, do decision point, because it's the DP off the last swing into that low. And look what happened yesterday. There's the DP. The market went up. It opened up a bit, hit that DP before reversing off. If I now look at the 3-minute chart, there's the DP reversing nicely. We'd now be looking for sell setups, wouldn't we? What did the market do all day? Well, it did drop down to start with, and there weren't any sell setups, which is frustrating. So we called the larger degree trend quite nicely, but there weren't any setups in our trend direction. Remember that VS, we wouldn't be looking at that. Why? Because the VS trade setup is a failure beyond an important psychological high or low. This VS setup was only a failure of this minor pivot here. So this one wouldn't be a trade setup to take. So again, remember that as well. So here you sit all day watching this and there were no trade setups. That does happen. That's very frustrating. The NQ, I think, was even more frustrating because here was the 15-minute DP off the last swing into the low. There it was there. This case, the market didn't quite reach it. But if we look at the 3-minute chart, can you see how we had a nice sell setup here? If I right mouse click over that red sell bar, there was a nice sell setup for 3-hour profit off that quite nicely. But even though the MTP trend was red, I probably wouldn't have considered that an ideal trade because it hadn't quite reached its DP resistance. So these are the curveballs that markets will throw at us. They will give us times when you catch the high or low perfectly, but you don't get any trade setups. Or you get a trade setup, but it didn't catch the high or low, so the picture wasn't clear. And what the downside of this is, psychologically, it will affect you. So what will happen is when you then get the setup that isn't quite clear in the future, perhaps then you go to the YM and then you see this setup here, this one here, and you think, well, we haven't quite come to higher time frame resistance. So I'll go out to there's no pivots there that have reversed really nicely. If I do the DPs, this high here has gone beyond all the DPs, so they haven't really reversed nicely at it. So there's no clear pattern, but you then see this setup. You see our MTP trend is red. So you think, well, I like the look of that one there. I want to take that. Then what happens? It then stops you out. So you make a losing trade. That was a real pity, that one, wasn't it? Because if it had gone down to the target, that would have been lovely 7.5-hour profit. Markets play these games with us, but because you then would have made a losing trade, psychologically, again, it would be so hard to look to that and say, well, I made a stupid losing trade. Therefore, the next setup that comes through, you'll look at this and think, well, I won't do a trade. I'll back off and I'll be a bit scared of it. Perhaps a good example is that's happened just on the 24-hour session. I was looking at this morning on the ES. Where are we? So again, if we go out to the 15-minute chart, there's the last swing to the low, isn't it? Do you see that? The last swing to the low there. Right mouse click. There's your decision point level there. You can take the maximum DP off. So I just want to keep things simple. There's your DP. So when you come down to the 3-minute chart, you see what happened up here? Here's your higher time frame DP. It was just slightly beyond it, but not much. Here's a history triangle. So when we analyze the trade setup, you can see that this would have been a sell setup at the time that would have had you short. Into the first target would have been a 2.3 profit, but the market is actually still declining here at the moment. This is actually exchange delayed data, but I can see on my other screen that the market is still going down. So can you see that, this would have actually been a nice trade setup that you probably might have questioned and missed because you took a silly one on the YM the day before. So again, it's the psychology of trading. It's the games the markets play with our minds, and it is so difficult to keep a clear mind on this day after day after day. So, what do you guys who are in the webinar think about this so far? I mean, on the psychology side, do you guys find it hard sometimes? And in particular, what kind of things do you find hard? Yeah, a few of you coming in and saying that that you struggle with particularly letting trades run. I think that's the hard thing. And when you haven't had a trade for a while, it's so easy to get into some trades that are not ideal and make some silly setup or silly trade decisions. That's quite hard. Right. Well, that's the main stuff I wanted to talk about today. Is mainly the psychology of trading and how to approach that yourself and actually just understand that it is a battle. Understand that if I go back to the British pound example, understand that first and foremost, we have to have the patience to wait for markets to make clear reversals at our higher time frame DPs and understand that half the time, or maybe even slightly more than that, the picture just won't be clear. In other words, you won't get a clear, clean picture of your higher time frame support and resistance zones. And when there isn't a clear picture, just stand aside, just don't do anything. And having the patience and discipline to wait until the picture's clear. Then once you have a clear picture, having the confidence to go into your trade setups when everything looks good, knowing full well that you will make losing trades. I won't say if you make losing trades, I'll say you will make losing trades. They always do unfold. But knowing or the understanding that when those losses come through, those losses will be kept as small a -1R. Now we do that because we know that over time, if you let the trades run, okay, that's the big if you let the trades run, you have profits that are large in relation to the losses. That's what makes you the money over time. But it's the understanding and the acceptance, I think, that's probably the better way to put it, the acceptance that markets will just chop sideways and you need to give a market time to get to its target. I think there's so many systems available nowadays and that gear towards scalping and short-term trading. And the reason they do that is because it panders to the psychological sort of weakness of us humans in that we can't bear to see a market go against us. We can't bear to actually see a market go with us for a bit, then go against us. In other words, we want to always be coming out quickly. But of course, if you do that, if you keep on wanting to come out of the market quickly, you'll never, ever get the big profits. You'll never, ever have the 10 or even 20R trades. They'll never arrive. So without those big profits, it's so difficult to move your trading account forward. That's why this, scalping and actually so many systems that I see today are so hard because they're only forever taking small profits. And it doesn't take too many losing trades then just to wipe you out. So, if you want to get ahead in this, I'm afraid what you're going to have to deal with is your own demons in your mind to let your trades run. You have to do that. I've said a lot of it in previous webinars, but this webinar, we're really focusing on this, is to let your trades run to then allow them time to then get to the higher profit targets. And then if you are making some trades with big profits, then taking your losing trades becomes psychologically so much easier because you've got a big profit buffer to then, nibble away at. And you just know that there will be losing trades, but you know that those big trades will come through to then push your account forward. It really is a psychological game, this trading. Right, so that's all I wanted to talk about today. So are there any questions in the last couple of minutes or any comments on the psychology before perhaps we end the webinar slightly earlier today because the markets are just opening now, so we can go and start to have a look at our own trading day. Yeah, thanks, Sylvian. You're dead right. Yeah, it's the order of the profits and losses makes a big difference in the psychology. So he's made a good comment there, is that if, for example, you start and you have 2 or 3 losing trades, then it's awfully difficult to then pull the trigger again, to then want to get your big trade and also to let it run as well. But if the first trade you do is a nice big trade, then psychologically it's easier having a few losing trades afterwards because you're coming down from a profitable position rather than coming up from a losing position. So yeah, that you're exactly right, Sylvian. That does help the psychology, but then you can never know which trades are going to be profitable or losses. If we did, we would know which ones to take and which ones to avoid, but you just don't know that. That's why, again, this game, psychologically speaking, is very hard, is that sometimes some traders will be lucky and they start off with some big profitable trades that then allows them to move forward psychologically. Some may be unlucky, come through with some losing trades and never really get past that, and then never get onto the big trades and allow themselves to move forward. So yeah, even though trading is a sort of logical and mathematical profession, yeah, luck can play its part as well. So you're dead right on that. Right, so there aren't any other questions coming through. So what I'll do now is I'll end the webinar now. So I'd like to say thank you very much for coming in, and hopefully you've enjoyed hearing a bit on the psychology on trading, and hopefully it's helped you sort of understand what the important points are and that what you may need to work on yourself to improve your your approach to trading, and just hopefully it helps you makes you better traders from from my experience over the last 34 years. So, we weren't talking about MT Predictor on the technical side of things much today, but I believe the psychology is important and will help you all as well. So have a good trading week, everybody. And we'll be back in a week's time to do it all again next week. So bye, everybody, and see you all next week.